Hello and welcome to this presentation titled Dispute and Deduction Management. This program is another in the 10-minute tip series of recorded programs for credit and collection professionals. I hope you enjoy it. My name is Michael Dennis and I'll be your presenter. Let's begin with an introduction. Resolving customer disputes or deductions is time-consuming and this activity is labor-intensive. On average, in the typical business-to-business credit department in the U.S., customer deductions account for 5% and typically less than 5% of the total accounts receivable balance open at any given time. However, the typical credit department spends far more than 5% of the time working on customer deductions. With this in mind, I think it's vitally important it becomes clear that we need to find ways to manage disputes more effectively. One recent study in the U.S. by a nationally known organization suggested that the typical credit department spends as much as 30% of its time on deductions accounting for 5% or less of the total accounts receivable balance. Today's program is intended to provide you, the listener, with tips and tools and ideas and techniques and hints about how to better manage deductions starting today. I want to offer this perspective on deductions. Once the deduction is taken, from the customer's perspective, they would prefer never to think about and never hear anything again about that deduction. Their expectation and their assumption is that the creditor company is either going to credit off the amount that they short paid, the amount that they deducted, or they're going to write off that balance. Let's think about deductions from the perspective of the salesperson. And by the way, if your salespeople are completely different than the ones I've known, great. But here's my perspective. Deductions from the perspective of the salesperson have very little to do with future sales, and therefore the salesperson may assign a relatively low priority to your questions to them about a customer deduction. And let's create a hypothetical around that. Let's assume that a customer has taken a deduction for $1,000 claiming a pricing error on your invoice. It is likely that you're going to have to talk to someone who's a subject matter expert on pricing, and that person might be the salesperson assigned to that account. In theory, it could be order entry or some other function within your organization, but it might be the salesperson. And again, the perspective here is that the salesperson doesn't think of this as potentially a high priority task. Let's think about a slightly different scenario. This time we'll think about a deduction taken by a customer for $1,000 claiming a short shipment. So they allege that they received $1,000 less in the box of product than you invoiced them for. Let's think about an inquiry that you would send then to someone, for example, in your shipping department, logistics department, warehouse. You're going to ask them to check to see if it's possible that we short shipped $1,000 to a particular customer because that customer has taken a deduction for $1,000 claiming that they were shorted $1,000 worth of products. That warehouse employee could view your inquiry as a distraction, or they could view it as a criticism of their professionalism, a criticism of their sloppiness in making a mistake involving $1,000 worth of product that should have been in a box, that should have been sent to a customer, that wasn't. So with those in mind, my perspective is this: the credit department is the only party strongly motivated to resolve customer deductions quickly. One way to manage deductions is to avoid them. And my perspective is that many deductions could be avoided if someone looked more closely at customer purchase orders. And if, in the context of reviewing a customer purchase order, it turns out that that PO lists the wrong payment terms, then in my opinion, that purchase order needs to be rejected. So again, a situation, a scenario. Your standard payment terms, let's just say, are net 30-day terms. No discount, just payment due net 30 days from date of invoice. And the customer's PO comes in and it says that the payment terms are net 90 days. In my opinion, that's an automatic reject. You would reject that purchase order in exactly the same way as you would reject a purchase order if it contained the wrong price for the product or the service that you provide to customers. So with that in mind, we would reject the PO because it contains the wrong payment terms, and we would do the exact same thing in connection with a purchase order that contained any other problematic terms and conditions of sale. For example, the purchase order might say, notwithstanding anything to the contrary, meaning the customer's standard terms and conditions govern this, including our standard warranty, which we require from our suppliers. That wouldn't be a term that a creditor company would be very comfortable with. Creditors determine the warranty period and the warranty terms and the warranty remedies and the warranty scope, not the customer. So you would expect and assume and desire that the person reviewing the purchase order would reject that purchase order because it contained other problematic terms and conditions. In these scenarios, what I'm suggesting is that the creditor company, your order entry person, your salesperson, reject the PO and insist that the purchase order be reissued, as opposed to contacting the buyer, the person that issued the PO, discussing the situation with them, and obtaining from them a commitment, perhaps, that they're going to fix the PO after the fact. I don't think that's enough. There have been too many situations I've personally been involved in where a commitment like that was made, but somehow magically at the end of the day, nothing was done, nothing was changed, and when the invoice came due, the customer's accounts payable department still showed the net 90-day terms and insisted that their purchase order was the controlling document, and therefore they had 90 days to pay the invoice. How to resolve deductions quickly. Number one, do the research. So we'll go back to the pricing dispute involving the $1,000 pricing deduction. The first thing that we need to do is we need to figure out whether or not we're correct, our invoice was correct, the pricing was correct, and the deduction was incorrect, or alternatively, that the customer was correct and we owe them a credit for $1,000. And in that same study I mentioned on a previous slide, one of the questions that was asked was, how often is the customer right? And it turned out, according to the survey respondents, that about half the time the customer was correct, or at least partially correct, when they took a deduction. So we want to document the research, and we'll just assume that the research indicates that the customer is 100% wrong and they owe us a payment of $1,000 to cover the deduction that they took. At that point, we would send the relevant documentation to the customer. To ensure that they got it, we would follow up. We'd follow up to make sure the customer received it, the customer reviewed, and they understood the contents of the documentation we had provided to them, and that the customer is taking action, and specifically that the customer is in the process of considering or seeking approval for repayment of the deduction that they had taken in error. It's also a tool to resolve deductions quickly if we can document the process workflows in connection with the various types of deductions that customers take. Because we know there's a different workflow in terms of reviewing and addressing and resolving and gathering documentation depending on the type of deduction. So a pricing deduction has a different workflow than a short shipment, and a short shipment has a different workflow than a missed shipment, etc. Damaged in transit has a different workflow than a pricing dispute. In addition, another way to address and resolve deductions more quickly is to eliminate the internal roadblocks that delay deduction resolution. So, one of the things that we need to do is make sure that we're getting timely responses from other people, from our coworkers, in connection with a deduction that's been taken by a customer. One of the ways that you do that is you measure the response time. You have an expectation about how long or how soon you should be reasonably willing to wait for a response from a coworker to a question about a deduction taken by a customer. In addition, you can resolve deductions more quickly if you have the right technology. You might, for example, want to consider purchasing deduction management software as a way to accelerate and simplify the process of resolving deductions. Thank you for your time and attention. I hope you found this program to be helpful. If you're interested in hearing the entire presentation on deduction management, please contact the sponsoring organization for information about ordering the on-demand program. And have a great day. Thank you.